Hello, good morning, ladies and gentlemen. Hello, good morning, ladies and gentlemen. It's a beautiful and sunny morning from this part of the world. I would like us to confirm that you can see my screen and you can hear my voice clearly by typing hi in the comment section. So I'll need some feedback, please, so that I can be sure that we are on the same page here. So if you can see my screen and you can hear my voice clearly, please type in hi in the comment section. Okay, I'm trying to load up my comment section and let's see what we have. All right, okay. Doji Kida, good morning to you. Thank you very much. 475, good morning. Just 321, good morning to you. Thank you. 80649575, good morning to you all. I can see Valeric Bongano Hall. I'm not sure what that is, but I assume it's a greeting. Okay. Hegebi, hey, thank you very much, Hegebi. Good morning to you. I think this is my first time seeing you here. Are you a newcomer? Let me know, please. Agaris, good morning to you. Okay, that's also a new name to me here. All right. So, with the dozens of feedback here, I'm so excited to welcome you all to yet another promising session on the X Trend Speed Live. My name is Sheriff Daramola, and for the next 1 hour, I will be your host, where we shall be evaluating the financial market using technical parameters to identify trading opportunities lining up for us today. And for those who are joining us for the first time, you are highly welcome on board. I'm so glad to have you around with us here. So you're welcome to the new family, to this family. So what we simply do here on a daily basis is to analyze the financial market, gather here as a community, analyze the financial market. We normally have pairs and instruments that we have been monitoring since the beginning of the week. For instance, this week we have about 5 to 6 pairs that we have been monitoring. So we come here, review how well price action has been doing so far on the trade. Then we try to take a position ahead of the New York session today. So this is what we simply do here on a daily basis, 10 a.m. UTC. And well, it might look overwhelming at first, but I assure you that with time you get to understand how this works. Just stay tuned in through to the end of the session. It's a 1 hour session, and you can always be part of us on the following days, and I assure you that with time you get to understand how this works, and you will be able to use the information you have gathered here to take your own individual decision on these pairs that we have been monitoring here together. So once again, you are welcome on board. I can say again, be confirming that this is his first time. You're highly welcome and glad to have you around. So try to stay tuned until the end of the session, please. I can see Carrie. Good morning, Carrie. How are you doing this morning? I can see Steamroller too. I can see your emojis. Happy faces. All right. I trust you're having a wonderful day at work. Okay, you're welcome, Megabeam. And at this note, let's dive into the current market structure to see what is really going on in the market today. And as usual, you know what we look out for. First of all, when we start the day, we want to be taking a taps on the fundamental perspective in the market. And as a result of this, we are going to be looking at the economic calendar together to see if we do have any macroeconomic event to look forward to today. And you all know that despite the technical understanding of the charts, we need these fundamentals, which obviously serves as a catalyst for price action. So without the movement of price action, you obviously know that the technical understanding we have is null and void. So for today, March 29th, which happens to be Wednesday, we don't have any high impact event. As you can see here, the only event we have as affecting the Aussie dollar, which is actually not part of the pairs that we have been monitoring for this week. So with that being said, here we are going to be skipping this and we shall be diving into the charts using our technical skills to identify potential trading opportunity today. So with that being said, the first commodity we are going to be looking at this morning is the US oil. And on the US oil so far this week, we have been quite profitable on this pair. As you can see that since the beginning of this week, we have been buying the US oil so far, and the week started at around the $69.80 level, as you can see here. So at the beginning of the week, hold on a second, I hope you can see my screen clearly. Let me zoom this in a little bit so that it can appear very vivid to your visuals. All right, so here we go. So this is where the week started for us on the US oil, as we were able to identify the simple setup here where price action was initially trapped within this channel, just right within the $69.80 level and the $69.10 area. So we had the resistant line of that channel here, which was negating all attempt by the buyers to break out of that structure. And we also have the $69.10 level, which happened to be the support line for this week. And you all know what we look out for whenever we have this kind of simple setup. We want to see price action either break out of the channel to the upside to give us a buy signal, or a breakdown of the channel to give us a sell signal. And with our sell stop order and buy stop order placed at both ends, we saw how our buy position was triggered here during the early hours of Monday's trading session, and during the New York session on that same day. I think during the live session that same day, we had this position triggered, and it was at this point we had our first buy position for the week. And I also stated here on that same day that we are going to be looking out for more opportunities to buy if it so happens that price action breaks out the structure, which at one point in time was a strong selling niche in this market. Now, with the breakout retest of the $70.20 level that was on that same Monday during the New York session, we had the breakout retest, welcoming a second position in that regard. And on that same day, I think the same day, yes, also we had a structure at the $71 level, which happened to be the flat channel we identified on the daily time frame. We are going to be looking at that in a moment so that you can understand what is really going on here. So we had the breakout of the structure too as well, which welcomed our third position for the week, and we were able to ride the move all the way up into the $73 level where our TP target was placed, and at this point we were able to scoop over 800 pips in profit on all positions. And with the situation we had here going into the live session yesterday, we noticed our price action was trapped within a channel after testing that $73 level. So we saw rejection of that structure, giving us a new resistant line, and we saw this rejection of this area by the buyers at the $72.50 level to give us a support line to guide our trading activities ahead of the New York session yesterday. And you know what we look out for whenever we have the kind of simple channel here. We want to see price action break out retest of structure or break down retest of structure to give us an opportunity to either buy or sell. And this was what happened prior to our live session yesterday. We already saw the breakout of the structure prior to the live session yesterday, and during the live session yesterday we were around this point here where we were looking out for buy opportunity at the breakout of this level. So we saw price initially did a breakout. If you had bought at that point, you must have been taken out as we saw the sharp move to the downside. But one thing about this candle yesterday was the fact that it closed in the form of a stick that looks more like a hammer candle, which has a tendency of buyer presence in this market. So look at the sharp rejection of that support line here, as price was unable to even close below that level, to further giving us a clue that the support line is a very strong one. And with that being said, here we still have a buy stop order around this area which triggered that buy position, and since then price action has been finding higher highs. And during the live session yesterday, I told us all that we should be anticipating another position if price action ever breaks out, retest that $73.50 level. And so far so good in the last 24 hours. We already have 2 positions at least in the meantime on this one. And currently, if you had joined this position right now, the first position you will currently be with over 100 pips in profit on the first position, and on the second position here you will be in at least 50 pips thereabout. So a total of 150 pips is not bad to add to the previous 800 pips that we already had this week so far. So the next thing we want to be doing here, for those who are taking advantage of this bullish momentum yesterday right at the breakout of the $73 level, we want to be moving our stop loss accordingly to secure this current position. And for this situation here, I will be suggesting that we have our stop loss somewhere just right above the $73.50 level, which happen to be close to the entry zone of the second position in this market. And with the situation we have here, after locking in our profit, and let's see what is going to be going on afterwards. But one thing I noticed during the early hours of today, when I looked at the chart here, I saw that we also have a structure here at the $73.90 level, which I actually shared on my public platform, which has been serving as a selling niche for participants in this market since the later part of the New York session yesterday. And with this kind of situation here, for us to join a trend continuation, we want to see price action break out, retest that level to give us that confidence and confirmation to be part of that trend continuation. And if you look at what has been happening here in the last couple of hours, we have been seeing buy pressure resume above the $73.50 level, leading to the situation here where we have an engulfing candle slicing through the $73.90 level, taking out all the sell positions here to give us that clue into the potentials of the buyers at this particular point in time. And if you are taking advantage of this opportunity at the breakout of the $73.90 level, kudos to you for being on standby to have caught that move. But if you had missed that opportunity here, well, we shall be looking at this current market structure to see if the market will be giving us another opportunity to add more position to our existing trade. So following the breakout of structure, you all know from a theoretical understanding, we expect that after price action breaks out a significant structure like this, there is a likelihood that price action could come back, do a retest of that structure, and if the appearance of buy pressure resumes around this area on our lower time frame, we'll have no choice than to look out for more opportunities to join that potential rally to the upside. And now, to make things a little bit easy for us during the New York session today, what I did here that we shall definitely be using to guide our trading activity today is this beautiful bullish trend line I was able to identify here. Now, if you look at the current structure here since the early hours of yesterday's trading session, you will see that price action has been finding higher highs and higher lows in this market. And if we connect the series of higher lows in this market here, we have this resultant bullish trend line that is highlighted on your screen right now. And for today's trading session, I am of the opinion that this trend line shall be used to guide our trading activity for today. Now, how do we want to be using this trend line to guide our trading activity? Well, if you have been with us here since God knows when, you will know that this trend line here, if price action continues to trade above that trend line, we shall feel comfortable in our buy position. So we want to be seeing something like this. Even if price drops to the downside, we still feel comfortable. But as long as price remain above that bullish trend line, we are still good to go for this buy position that we have here. But if price action drops below the bullish trend line, probably takes us out of our buy position, and then we start seeing selling pressure right below the bullish trend line and the $73.50 level, then we'll have no choice than to look out for selling opportunities. And if a sell position happens here, well, for me personally, I'm looking forward to a bullish momentum here. I'm tending towards it. I'm holding on to a bullish bias. But one thing I normally say is that we want to be as fluid as possible. The market is a very fluid environment. And for us to be profitable in this market, we want to be as fluid as possible so that we can catch any potential trading opportunity. So in as much as we are looking forward to a buy opportunity in this market, we also want to take into consideration the potentials of the sellers in this market, as we might likely see sell-off happening in this market. And one thing I also want us to do here, if we zoom out a little bit and look at what has been happening here since the beginning of the week, you can see that we already have a huge impulse leg here. And from the look of things, there is a tendency that we could have a retracement phase at any point in time, as those who are taking advantage of this trading opportunity at this point will probably want to be doing some profit-taking activities, which will probably reflect on the chart in the form of a retracement to the downside in anticipation of another wave of bullish momentum to the upside. So these are things that we also want to be taking into consideration. So despite we holding on to a bullish bias here, we also want to be on standby just in case a bearish momentum ever comes in. And if a bearish momentum comes in at this particular point in time, what do we want to be seeing for us to be sure that it is time to sell the US oil, or probably join this counter trend opportunity, which I will be calling a retracement phase to the downside? So what I want to be seeing here is price action breaking down the $73.50 level, which also shares a beautiful confluence with that bullish trend line that has been supporting price action since yesterday's morning. And then if a breakdown happens, remember, we are not getting too excited at the sight of that breakdown. We want to see some further confirmation, which is likely going to be coming in the form of a retest of structure, and which is further emphasized by selling pressure below the structure on our lower time frame. Then we could actually join that decline to the downside. And there is one thing that I would like us to note here, which we identified yesterday, and that is this bullish trend line, which has been supporting the bullish momentum since the beginning of this week. And we might likely see a retracement phase into that trend line here, which obviously shares a confluence with that support line that was supporting this level since Monday's trading session, as you can see here. So we have a confluence around this area, which will be serving as a bus stop. So if we are joining the sell momentum below the $73.50 level, as soon as price gets into the structure, we want to be securing all sell position, as it depends on how price action reacts to this level that will determine if we are going to be adding more sell position to our existing trade, or we might be anticipating at the beginning of another wave of bullish momentum. So if price action gets into that area, these are things that we want to be looking forward to. But as long as price remain above the $73.50 level, which also holds on with that bullish trend line, we shall remain comfortable in our buy position. So we are not looking for any sell position here unless price action breaks down both this bullish trend line and the $73.50 level to the downside. So that is my view here on the US oil for today. I hope I was able to simulate all the possible scenarios that could likely happen here, and my advice is that you might want to screenshot my screen so that you can use it as a reference point when you're about to make your individual decision. And if you do have any questions you want me to help you clarify, please feel free to drop your inquiries in the comment section, and I will be willing to be of help in that regard. So let's see how this plays out today, and let's see what's happening in the comment section. I can see Agabi. Okay, you are welcome, Agabi. Doesn't the AUD affect gold prices? Okay, well, personally, I don't like bringing all these pairs together, as we have what we call correlative trading. I don't buy into that idea at all. So one thing I normally do is I follow the price action. There are times that we have situations where the major pairs actually correlate with each other. For instance, like the GBPUSD could correlate with the Euro USD. If the GBPUSD is going bullish, you could see the Euro USD going bullish too as well. And there are times that they don't actually correlate at all, as whenever the bullish momentum is happening in the GBPUSD, probably the Euro USD is yet to go into that bullish momentum, and instead it's still going through a retracement phase. So there are times this kind of situation always happen. So because of this and because of my experience in the market, I don't do that. So what I do is I look at the chart itself on its own, and use the psychology behind the price movement to determine what to do next on that particular pair. So I don't correlate pairs with other pairs. I hope I made myself clear there. Steamroller. All right. If I didn't, please let me know and I will shed more light on that. All right. So with that being said here, and in the absence of no questions, I want to assume that we're on the same page here. So I will be moving on to the next pair. So the next pair we shall be looking at this morning is going to be the US Tech as usual. Cast, I can see your comment. Perfect day. I like that. Very positive. I trust you are doing well today. All right, so the next pair we are looking at is the US Tech. And on the US Tech, we have been selling the US Tech since the beginning of the week before this bullish momentum started during the later part of the New York session yesterday. So let's quickly run through how the week has gone by for us here on the X-Trend Speed Live. So during the early hours of this week, we were able to identify a simple setup here where price action was initially trading within the 12,855 level, which happened to be the highest point price action has ever been for this week. Then we also had the support line at the 12,780, and with that situation there, we had a channel where price action had been trading, which further emphasizes the indecision in this market. And you all know what we look out for whenever we have this kind of setup. All we want to be seeing doing is to remain patient and wait for price action to either break out of the channel or break down of that channel for trading opportunity. And prior to the live session on Monday, we saw the signal here where price action actually did a significant breakdown of the 12,780, taking out the buy pressure around that area to give us a signal of a potential sell momentum to the downside. And what we did here during the live session, as we were at this point in time during the live session around the 12,820, that was on Monday, and we said since price action already broke down the structure, we want to anticipate a trend continuation to the downside. And what we agreed here on Monday was to place our sell stop order anywhere right below the support line there at around the 12,780 or below that structure to trigger a sell position. And this was exactly what happened here a couple of hours into the New York session on Monday. Then we saw price action broke down significantly well to the downside, hereby hitting our TP target at around the $12,650 level with about 840 pips on that first position. Then remember, we also had this 12,750 also figured out that same day. It was a support line initially at the beginning of the week. Then we needed a breakdown of the structure to trigger to add more position to our existing trade. We actually had a sell stop order there, and price action moved from that level to the downside with about 100 pips thereabout. So as at the first day of this week on the US Tech, we already closed in with over 300, close to 300 pips in profit on that one. Then during our live session yesterday, we had a situation here where price action was trading just around the 12,650 level, which happened to be a very important key structure that we identified on the 4 hours time frame. And for those who are not part of the live session yesterday, don't worry, I will still be going into the details of what it looks like on the 4 hours time frame before making a decision for today. So we were around here yesterday, and I told us all that considering this impulsive move here that broke down to 12,650, there is a likelihood that price action will be breaking down the 12,650 level for another selling opportunity. So we had a sell position there triggered yesterday, and I told those who missed out on that opportunity that if price action ever comes back to do something like a retest of structure, we could actually do some more sell position in that regard. And this was exactly what happened during the New York session yesterday. We saw price action slice through that structure with engulfing candles, and in fact price moved over 130 pips in our favor before those bullish momentum came in to take us out of all our positions. And I hope you moved your stop loss accordingly, because it's our culture here that as soon as price moves significantly well in our favor, we want to be moving our stop loss accordingly to protect our position, as there is a likelihood that anything could actually happen. Price could take us out of the position, and we don't want a price to take us in such a way that we fall back in a loss after making so much profit on a trade. So with the situation here, you must have been profitable at least with a minimum of 100 pips thereabout, whichever case it may be, and in worst case scenario probably at break even. So with the situation we have here in the last 24 hours, we have seen some bullish momentum begin in this market. Personally, I missed out on this opportunity as this whole situation here happened during the course of the midnight. So at this point in time, how do we intend to trade the US tech going into the New York session today? So the first thing I'll be doing right here is to scale up into the daily time frame. So let's quickly run through the holistic point of view here to see what is really going on from a higher time frame. Then we shall be coming back into the lower time frame to make a decision for today. So the next thing we shall be doing right now is to scale back up into the daily time frame, and let me share with you what we saw here on the daily time frame on Monday morning. And I told us all how I was able to strip the chart of all the previous structures I had here, so I needed to have a fresh new look on the chart, and this was what I was able to see here on the chart. So if we go to as far back as last year's trading session, you will see that throughout the course of last year, price action has been bearish on this chart. And to further emphasize the strength of the sellers in this particular market, we connected the series of lower highs, which gave us this resultant bearish trend line that you can see on my screen right now. And as you can see, price continues to drop to the downside, but since the second half of, I think the last quarter of last year, we begin to see buy pressure resume around the 10,500 level, hereby negating all attempt by the sellers to drop below that structure. So this bullish momentum around this area continued into the beginning of this year, where we saw this bullish momentum started this year at around this area, and this bullish momentum started in such a way that it moved into the upside, finding higher highs and higher lows, leading to the significant breakout of that bearish trend line, which has been supporting this bearish momentum since the beginning of last year, to give us a clue that the trend line is no longer strong enough to hold that sell pressure any longer. And with the situation here since the month of December last year, we can see how price action has transitioned into something that looks more like an ascending channel. So when we connected the series of higher highs here, we have the resistance line, and when we connected the series of higher lows here, we have the support line for this channel. And if you look at what has been happening here since the month of September last year, you can see how the 12,800 level has been a strong selling niche in this particular market. So every attempt by the buyers to break out of that structure at every point in time has been met with strong resistance from the sellers. You saw what happened here during the month of February. So throughout the month of February, sellers continue to negate all bullish attempt. And a couple of weeks ago, we saw how price action came back into the 12,800 level, and during this area we saw how sellers negated the bullish attempt in this particular market. In fact, if we focus on what happened on Wednesday and Thursday of last week's trading session, you can see the nature of this candle closing in the form of a shooting star candle, which from a technical standpoint indicates the presence of sellers at this particular juncture in this market. And at the beginning of the week, we decided that if the selling pressure continues below the 12,800 area, we shall be looking forward to more opportunities to sell the US tech. And if price action breaks out of that structure, we shall be looking forward to buy, with the hopes that price will get back into the resistance line of that ascending channel, which also shares a confluence with our key structure we have there at the 13,800 level. But since the beginning of this week, what we have seen on this chart is the fact that price has been bearish. We have been seeing selling pressure resume below the 12,800 level, which incited us to sell the US tech so far for this week. And since since yesterday now, we have been seeing some buy pressure resume somewhere around the 12,560 level, somewhere around here, and we have been seeing this move to the upside. So will this turn out to be a trend continuation pattern where price will break out of the 12,800 level to incite a bullish momentum, or probably this could just be a way of gathering some momentum for another wave of bearish momentum to the downside? So these are one of the things we want to be looking at. But when we scale down to the 4 hours time frame at the beginning of the week, we were able to identify this ascending channel after taking into consideration trading activities since the beginning of the month of March. And look at what we have here in the month of March. We have, throughout the month of March, price has been finding higher highs and higher lows, further emphasizing the strength of the buyers in this market. But something interesting happened here last week's trading session. We saw that as soon as price got into the 12,860 level here, let me extend this out a little bit, we started seeing selling pressure resume around that area to give us a clue that we might likely be seeing a retracement anytime soon. And we saw this impulsive move last week going to the downside, breaking down to 12,650, coming close to the support line of that ascending channel. But with the buy pressure resuming around this, as you can see, price didn't feel comfortable coming to test that trend line at all. And if that is happening, coupled with the fact that we have been seeing some buy pressure around that area, as you can see these candles here with sharp rejection of this area, I'm of the opinion that buyers are gradually coming in this market. And in this kind of situation here, we might likely see a bullish momentum going to the upside. And unfortunately, I missed out on the breakout of 12,650, because if I had seen it, I would have taken advantage of that opportunity. But for those who are taking advantage of that move right there, well done to you for being on standby to have caught that move. Now, the question for today is, are we going to be having a retracement after the breakout of the structure, that is price action come back to retest structure in anticipation of another wave of bullish momentum to the upside? And if that is going to be the case here, then we shall be having a structure that looks more like an inverse head and shoulder. As you can see, we have the left shoulder here, we have the head, and then we should be having the right shoulder here if price action comes back to do a retest of structure to incite that trend continuation to the upside. So these are things that we shall be looking at today. But one thing for sure is that we shall be taking into consideration trading activities just around the 12,720 and the 12,700 area when we scale down to a much more lower time frame to look out for trading opportunity around that area. So at this point in time, I will be looking forward to buying opportunity on the US tech. But when will the buy opportunity come? Is it going to come after a retracement into structure before it continues to the upside, or is it going to come after probably a trend continuation pattern reveals itself on our lower time frame, and then boom, we go to the upside? So these are things we are going to be looking at on a much more lower time frame, and we are going to be focusing at the area between the 12,700 and the 12,750 level. So scaling down into the 1 hour time frame where we begin to see things more clearly. So what I will be doing right now is to focus on that area which I said is around the 12,700 and the 12,750 level. So this is what we are going to be doing here. So I will be bringing out my line chart at this point, and then this is where we are. So this is the 12,700 level. So we are going to identify that structure, and this is going to be one of the levels we shall be using to guide our trading activities for today. So we have the 12,700 level here figured out. So I would like this to be at the bottom, and I will want to reduce the font size to 10 here, and we have something like this. Then I want to delete this one as this is no longer needed for this current structure. Then I will want to extend this one out a little bit, and then we have another structure around the 12,750, like we identified on the daily time frame. I think it's 12,740 instead. So we label this one, place it at the top right hand side of our screen, then we have a beautiful setup that we want to be using to guide our trading activity for today. So we have a simple setup right now where price action is currently within a range here within the 12,700 and the 12,740. Now you know what we look out for whenever we have this kind of channel. It's something very simple to trade here. It's either price action breaks out for buying opportunity or price action breaks down for selling opportunities. And one thing I would like to do here to further make things a little bit easy for us during the New York session to be able to identify trading opportunity and at the same time feel comfortable in whatever position that we are in. So what I will be doing here is to look at what has been happening here since the beginning of this week, and obviously it has been bearish as price action has been finding lower highs in this particular market. So what we want to be doing here is to bring out our line chart, then connect the series of lower highs to emphasize the strength of the sellers at this particular point in time. So if I bring out my line chart here, we have a bearish trend line, and we bring out our candle chart to do some adjustment to fit into the current structure. And if we do that appropriately, we should be touching these wicks here, and then we have something like this, which we shall be using has a yardstick for trading activity for today. Hold on a second, let me just fine-tune this so that it can fit in. Should I use this one or use this trend line as we already? Okay, I use this touch here, and beautiful. So we have something like this here. It maps out, it takes the average of all these weeks here, and we have a little breakout of the trend line here in the last 4 hours in this market. So we are at a critical point in this market right here where anything could actually happen, and we could probably see this this move to the downside, this bullish momentum here as a retracement of that impulse leg that started at the beginning of the week, where a reversal pattern around the structure breakdown of the 12,700 level will bring price back below the bearish trend line, respecting the structure, and we could be looking forward to another wave of bearish momentum to the downside. So these are one of the things we are going to be looking at the structure. Then since we have a breakout of that structure there, the structure here could transition into a trend continuation pattern that could break out of the 12,740 to incite another wave of bullish momentum. So you can see that we are at a critical point in this market right here. So for me at this particular point in time, to sell the US tech for today, we want to see price action break down the 12,700 level, selling pressure below that structure to join a sell momentum to the downside, and the further breakdown of the 12,650 will be welcoming additional sell position in this market. So if that's going to be the case here, the bearish trend line will be our guide for that sell momentum to the downside. But if price action breaks out of the 12,740 at this point, our buy pressure above that level will welcome buy position, as price will have taken out that bearish trend line that has been resisting bullish pressure since the beginning of the week to emphasize the strength of the buyers in this particular market. So this is a simple setup we have here. So we are looking forward to buying above the 12,740 if price action breaks out of that structure, and we are looking forward to selling if price action breaks down with selling pressure below that structure on our lower time frame. So that is my view here on the US tech. It's a simple setup, and if for me personally, I will be tending towards a bearish momentum on this market, as it has been bearish since the beginning of the week, and coupled with the fact that price action broke down a key structure here at the 12,650, I'm of the opinion that price will continue to the downside, as this might likely be a retracement of a trend continuation to the downside. But if price action breaks out, well, we will have no choice than to look out for buying opportunity above the 12,740. So that is just my own bias. I feel it's going to be bearish, but if it breaks out of the 12,740, then we would have no choice than to look out for buying opportunities at that particular point in time. So that is my view here on the US tech. If you have questions or you need me to do some clarifications to what I just explained so far, feel free to drop your inquiries in the comment section below. So that is that on the US tech. So let's move on to the next pair, and that the next pair we are going to be looking at this morning is going to be the GBPUSD. And the GBPUSD has been quite impressive since the beginning of the week, though we had some bullish momentum. Actually, remember we had this situation here at the beginning of the week where price action was trading within the 1.22500 level, which happened to be the resistance point at the beginning of the week, and we had a support line for the week sitting at around the 1.22300 level. And we know what we look out for. Obviously, very simple setup. We want price to break out or break down the structure for a trading opportunity, but instead this week what happened was a breakout retest of that structure to give us that leverage to buy the GBPUSD at the beginning of the week. So we bought the GBPUSD and we added more position at the breakout of the structure at the 1.22800 level, and at that point we had price action move about, for the first position price action moved about 75 pips in our favor, and the second position we saw our price moved about 50 pips in our favor before this bearish momentum happened. And during the morning live session yesterday, I told us all that we want to be looking forward to selling opportunities below the 1.22100 level here. And the reason why I said this was because of the strong selling niche at around the 1.2350 level. And if you look at what happened during the course of last week's trading session here, you saw how sellers negated all attempt by the buyers to break out of that structure. And the same thing has been happening so far. And I told us all yesterday that as long as price remain below the structure, we want to be thinking of selling the GBPUSD. Now, the same thing also happened here during the early hours, later part of the New York session yesterday. We saw selling pressure around that area. So we saw price action break down that structure here during the New York session yesterday, and you must have taken advantage of that opportunity, but unfortunately we were taken out of that position in a loss as price action takes us out at our stop loss here. And I told us all yesterday that I wouldn't be thinking of buying the GBPUSD unless we see price action take out the sell position here at the 1.23500 level. And the only thing we are going to be doing to buy is to see price action take out that structure, of course, in such a way that we have a breakout of that structure and buy pressure resumes probably around this area to incite another wave of bullish momentum. But if you look at what has been happening here in the last couple of hours, we can see we have some buy pressure which resumed around the 1.22100 level, just right along the bullish trend line that has been supporting this bullish momentum since the later part of last week's trading session. And look at what we did here at the beginning of the week. We connected a series of higher lows in this market, hereby giving us this bullish trend line that you can see on your screen. And since the beginning of this week, price has not broken down that structure, which is giving us a clue that buyers are still very, very strong in this particular market. And since we have a breakout of that 1.23500 level this morning with an engulfing candle, that is a beautiful signal that we might likely be seeing a bullish momentum at this point. So you want to be doing something right now, placing your buy stop order. Since we already have a breakout of that structure, having a buy order above the 1.23500 level seems most appropriate at this point. We might likely have a situation where price could retrace back into the bullish trend line here to gather some momentum so that it can get that trend to break out of this level. So these are things that we are going to be looking at. So if you have your buy stop just right above the 1.23500 level, you should be having your stop loss somewhere around this area, which will be dovetailing between the 35 to 40 pips thereabout as a stop loss on this trade. So we continue to use this bullish trend line as our yardstick for trading activity today. So that simply means that if price action continues to trade above this bullish trend line, we shall feel comfortable in our buy position. But if price action drops below the trend line, breaking down the 1.2100 level, like I always told you since the beginning of the week, that we are not going to be getting too excited by having a sell stop order right there. We want to be patient enough to wait for further confirmations to happen, which is likely going to be coming in the form of a retest of structure selling pressure below this level on our lower time frame, giving us a clue that buyers are finding it very difficult to break out of the 1.22100 level. Then we want to be thinking of selling the GBPUSD at that point. And we have structures here that welcomes additional positions. That is, if we do have a breakdown retest of key structures like the 1.22800 level and the 1.22500 area, we shall be looking out for more opportunities to add to our sell position. So that is my view here on the GBPUSD. So we are not going to be selling unless price action breaks down, retest the bullish trend line here, which also shares a beautiful confluence with that 1.22100 level. However, a breakout of the 1.235 level, which has already happened here, is more or less a sign that we might be going bullish at this particular point in time. So we already have a buy stop order at the 1.23500 level since we had a breakout, and I'm of the opinion that the current candle here is probably going through a retracement phase in anticipation of a trend continuation to the upside. So let's see how price action plays out in the next couple of hours. And one thing about this move to the downside here, price could retrace back into structure, it could retrace back into this trend line, and if we start seeing buy pressure, when we scale down to our lower time frame and we start seeing buy pressure around that area, or probably price action transitioning into a reversal pattern like a double bottom structure, head and shoulder pattern, or a falling wedge, whatever reversal pattern that evolves, breakout retest on our lower time frame will definitely make us to join earlier than the breakout of the 1.2350 level to maximize profit. And if a breakout happens, we should be adding more position as we already have a buy stop order at the 1.235 level. So these are my views here on the GBPUSD. Quite simple setup. Let's be able to take advantage of this opportunity when it finally happens. If you have questions, feel free to drop your inquiries in the comment section while I take some time out to take some bottle of water. All right. So in the absence of no questions, I want to assume that we're on the same page here, and I hope you have screenshotted my screen so that you can use it as a reference point when you're about to make your individual decision. So moving on right now, we shall be going on into the XAUUSD. And on the XAUUSD also, we have been quite profitable on this one too as well. Though we've been part of the swings here. We sold initially, we bought during the New York session yesterday, and it appears we are going to be buying again today. So let's quickly run through how the week started for us so that we can have a good background knowledge of where we are coming from, and so we can anticipate very well where we are going to for today. So the first thing that happened this week was this: we saw the situation here where price was caught within this channel, just right within the $1,980 level and the 1,970. So it was quite a simple consolidation phase here. We had the highest point price action has ever been this week at the 1,980. We had some buy pressure resume around the 1,970. But one significant thing within this channel was the fact that we have been seeing that price action was finding lower highs in this market, and when we connected the series of lower highs here, we had this bearish trend line, which since then has been our yardstick for trading activity in this market for this week. And one thing that happened here on Monday morning was fact that we had the breakdown of the 1,970 level, which triggered the first sell position for the week. And during our live session on Monday, because I already had the position running prior to the live session, I told us all that we want to remain patient here as we want to see some retracement phase back into structure before we want to be thinking of probably joining for those who had missed out on that opportunity, and for those who are already in that trade, we want to be adding more position to our existing trade. Now, we saw the situation here on Monday. We saw price action retrace back into the structure, and I told us all that if it retraces, we want to be selling just below the 1,960. And in fact, that same thing happened. We saw price action, sell stop order triggered there, and price action moved about 100 pips in our favor before this bullish momentum began. And during the course of our live session yesterday, I shared this with HOT yesterday. I told us all that the potential of a bullish momentum here is very, very possible just because of the way things are going on at this point. And one of the things I identified on the structure was the resumption of buying pressure around the 1,944 level. And before the live session yesterday, we saw how difficult it was for the sellers to break down the previous low. So we had a situation here where price came into the structure here, had the 1,950, and since then we begin to see buy pressure resume from that area. So what we had here was a higher low. Inability of price action to break down the previous low was a beautiful signal that we might be seeing some bullish pressure resume behind the scenes in this market. And I told us all yesterday that we might likely see price action transition into a reversal pattern in the form of a double bottom structure, and that was exactly what happened here. Remember, we saw this yesterday, and we said we should be having our neckline, which shall be our yardstick for trading activity. So we had our neckline sitting at the 1,964 level, which also shares that beautiful confluence with that bearish trend line that we identified at the beginning of the week. And you all know that if price action breaks out of the neckline at the structure, then it would have broken out of that bearish trend line, giving us a clue that the trend line is no longer strong enough to hold that bearish momentum. And what did we see here? We saw our price action triggered our buy position at the 1,964, and in fact price action moved about 120 pips in our favor before this bearish momentum happened. And in order for us to position ourselves for this bullish momentum yesterday, I took us all to a very neat chart here, which we saw on the 30 minutes time frame. I shared this with you yesterday, if you remember vividly. So we had the structure here on the 30 minutes time frame. So this structure here gave us the privilege to be able to buy even before price action gets to that neckline we identify at the 1,964. So you would have had two positions running on this position, on this trade rather. So this is what we saw here during the live session yesterday. We saw the trend line here. We had the bearish trend line, and then we had three key structures we identified here. The first one is the 1,956, which shares a confluence with that bearish trend line. Then remember, this is the 1,964 level, which happens to be the neckline of that reversal pattern that we identified earlier. So I told us all yesterday that if price action ever breaks out of the trend line at the 1,956 level, we want to be buying at that particular point in time, and I hope you really did. Then we also had another buy stop order above the neckline area, which also triggered our position there. So we had a total of a price movement of the first one ran with about 190 pips, and the second one ran with about 100 pips. So we had approximately a 300 pips move before the sell pressure in this market began during the later part of the New York session yesterday, stroke the early hours of today. Now, with the situation we have right now, how do we intend to take advantage of a trading opportunity today? Now, one thing I would like to call our attention to here is that reversal pattern. In fact, I would like to give the color of this neckline area to be red so that we can see the importance of that structure. Then let me give this one to a red color here. So let me give us a visual representation of what that reversal pattern looks like. So we had the first touch here. Price came into the neckline. Price action was unable to break the previous low, giving us a new high here. Then we had the neckline sitting here. Now we had the breakout of the structure here during the New York session yesterday, giving us some profit, and I hope you are able to move your stop loss accordingly before price action will have taken you out of those positions. You might have taken some profit obviously from those moves there. Now we saw price action break out of the neckline here yesterday, and you all know from a technical standpoint there is a likelihood that price will come back to retest the structure. So we saw what happened this morning. Price action actually did come back to retest structure, but it did some breakdown of that level to the downside. Then some reversal pattern happened on our lower time frame. Then I had a buy stop order above the 1,964, which triggered another buy position this morning, and I don't know if you took it, but it's okay if you miss that opportunity. We shall be looking at the potential of being part of this move if price action really will be going to the upside. So what I did here next was to zoom into the current structure. So if you had missed out on that opportunity, let me bring this a little bit closer to our preview here so that I don't get lost into the edge of the screen. So we have something like this, and there's let me bring this out a little bit. Okay, beautiful. So when we bring out our line charts and thus at this juncture in the market and look at what has been happening here since the beginning of this morning, you can see we connected the series of lower highs here. So we have a temporary bearish trend line that has been supporting that bearish momentum. Now a couple of hours ago we saw the breakout of that trend line, which for me is a sign that the trend line is no longer strong enough to hold that bearish momentum, at least in the meantime. We don't know how far this is going to be. Now with the breakout of that structure here, I had a buy position running. If you also did, well, you will currently be running with about 38 pips in profit. And if you are in this buy position, I would be suggesting that you move your stop loss to your entry point, and let's see how price action will be reacting to that 1,964. So now with the breakout of this structure here, there is a likelihood that price will still come back into structure to do a retest of that zone. It could be the retest of the bearish trend line here, or the retest of the 1,964. But the most important pattern we want to be seeing around this area is buying pressure resuming around this area. That is sellers find it difficult to go further to the downside. Then we could join or add more position to our existing trade at that point. So for today right now, for those who had missed out on that opportunity, well, we want us to remain patient here. Let's wait for price action to retrace back into the structure between the 1,964 and that trend line for us to be part of the potential trend continuation to the upside. But if price action does not drop into the 1,964, that is, if price does not come back into this area, then instead it continues to find higher highs, then my dear, I would advise you to hold on and wait for a breakout of the 1,975 for another opportunity to join this trend continuation to the upside. So these are the things I will be looking forward to for today. For those who are joined at the 1,964, you are very lucky if price action just continue to go to the upside from that area. And for those who had missed out on this opportunity, we have no other choice than to wait for price action to break out that key structure at the 1,975 for another opportunity to join that decline. Now that we're looking out for buying opportunity in this market, like you always know we do here, we want to also take into consideration the potential of a bearish momentum, as well as we want to keep that in mind just in case price action does the opposite of what we are planning at this particular point in time. So what will happen in this market if we are going to really want to be selling the XAUUSD? What do we want to see happen on this chart that will support a bearish bias in this market? Well, for me, if we consider the sell momentum since the beginning of this week, we should not ignore the potentials of the sellers in this particular market. So for me to sell here, what I will be looking forward to here is to see price action break down the 1,956 50-cent level, selling pressure below that area. Then I want to be looking out for selling opportunities in this market. Then a further breakdown of the 1,945 will be welcoming additional position in this market. So that's the only way I will be thinking of selling in this market. If this does not happen, if a breakdown of the 1,956 does not happen, we just hold on to our bullish bias in this particular market. So that is that for today on the XAUUSD. I hope I made myself clear. But if you think you need me to do some clarifications on any part of what I just explained so far, feel free to drop your enquiries in the comment section. So I will be diving right into the last pair for today, which is a commodity that was introduced to us by Steamroller at the beginning of this week, and that is the XAGUSD. And on the XAGUSD, what was our expectations here yesterday and what have we seen so far? Now, during the live session yesterday, this was what we saw here. Initially, at the beginning of the week, we were looking forward to a bearish momentum after citing a setup that looks more like a reversal pattern around this area. And we said we were going to be selling the neckline if price action ever breaks down the $23 level. But during the live session yesterday, things begin to change here as we saw a huge demand zone just exactly around the $22.850. Is it 22.85 cents? Let me put it that way. So we saw this strong demand zone around this area, which really gave us a change in perspective in this market. And I told us all yesterday that we are not going to be selling the XAGUSD unless price action takes out this demand zone in this market, that we want to see price action break down, retest of structure for us to be selling, and to further buttress the to further help us to be able to identify trading opportunity and at the same time make things easier for us to be comfortable in whatever position we are in this market. We were able to identify a bearish trend line here after connecting the series of lower highs since Friday's trading session last week. So we had this trend line. So I told us all that if price action takes out the demand zone and we start seeing retracement back into that structure, that trend line will be guiding our bearish momentum. However, I said if price action climbs above the $23 level, retest that structure, we want to be buying the XAGUSD, and I hope you did on that on the XAGUSD. Okay, I can see your comments, Steamroller. I hope you made some profits on this one, as we were able to rather move all the way to the upside here. Price action came out. If you had missed the first one, price action came back to give some confirmation, and in fact we can see price action traded above that bearish trend line, which further emphasized the strength of the buyers there, as the trend line was broken, negating the idea that this trend line will continue to hold that selling pressure. And we saw our price move significantly well to the upside, and in fact we had about how many pips move on that one? We had about 40 pips thereabout before this bearish momentum started coming in at this point. And I hope you were able to move your stop loss accordingly to secure that current position before you are stopped out on that position. So right now, as we head into the New York session today, what is our plans on the XAGUSD? What are we going to be looking forward to? How do we intend to take advantage of a trading opportunity today? So let me extend this bullish trend line a little further into the upside here so that we can capture more price action. And look at what we have here. Let me go back to our 1 hour time frame, which makes things a little bit more clearer for me to be able to see. So I will extend the $23 level out a little bit, and I think we are going to be identifying more structures around this area to help us be able to take advantage of some trading opportunity here. So the first thing I will do here, first of all, is to bring out my line chart. Then look at what has been happening here since yesterday. We have found a higher low. We connect the series of higher lows here. So we have a trend line here figured out. So I will just return this trend line back down. I'll return this trend line back down there so that we don't get confused with this one here. So let me just return it back to this list. So we have a new trend line here since yesterday. So I've been able to connect the series of higher lows at this particular point in time. Then in addition to that one, we need a key level to support any potential trading opportunity at this point. So at this area, I'm looking at the situation here. Okay. So if I extend this out a little bit, we have an ascending channel gradually unfolding before our eyes, and we should be having something like this. And at this point, if you had missed this one, well, let's see how we can catch up with any other trading opportunity around this area. So for me, let's do this. Bring out our line chart here, and then we identify the last resistance point, which falls at around the $23.35 level. We have $23.35 level here. Okay, $23.35 level. Okay, so we have that level there, and I want to see a breakout of that structure for me to be part of a bullish momentum here. So for those who had missed out on this opportunity here, then we want to wait for price action, taking out the sell positions here, retest of that structure with some buy pressure resuming around that area, then we could join a bullish momentum to the upside. And I'm of the opinion that this current position has the potential of giving us multiple entries here. Let me extend this one out a little bit. I'm still going to bring out my candle chart to, okay, somewhere around here, I guess. Okay, so we have the $23.50 level around that area, another psychological level there. So we have $23.50 level, where a further breakout or retest of that structure will welcome additional position in this market. Please hold on a second, give me a moment, please. Okay, let me just continue with this. So we have the breakout of that structure at this point here. So if price action breaks out this level, we had more position. We break out, we are looking forward to buying opportunities above this area. So that's how we are going to be joining this trend continuation to the upside. However, if price action finds it difficult to find a new high here, and the $23.35 level continue to be a major barrier for bullish continuation on this chart, then we will have no choice than to start looking out for selling opportunities, where a breakdown of this trend line will be welcoming a sell position. But we are not going to be jumping right away. We are not going to be getting too excited, as we'll wait and remain patient for further confirmation, which is always going to come in the form of a retest of the structure. We are selling pressure below the trend line here will welcome a sell position in this market. And if this leads to a further breakdown of that demand zone, then we look out for more opportunity at the retest of the structure. So this is how we are going to be selling. That is, if price action finds it difficult to find a new high in this particular market. So for this one right now, and for those who are already in the buy position, you still have your buy position running right now, kindly move your stop loss to somewhere around the $23.10 level. Secure your position around that area, and let's see if price action would ever break out of the $23.35. And if it does, we have another area here to look out for more opportunities. But if a breakdown of this bullish trend line happens, then a retest of structure should be welcoming a sell position in this market. So that is what we shall be looking forward to today on the XAGUSD. And I think on this note, I want us to be calling it a day here. But before we close and draw the curtain on this live session, let's run through what we have done so far today, and for the sake of those who are not part of the beginning of the live session. So the first commodity we looked at today is the US oil, and we have been profitable on the US oil so far since the beginning of this week, and we took some profit on Monday with about 800 pips with 3 positions running. And in the last 24 hours here, we have been part of another momentum that started at the $73 level here during the New York session yesterday, and we have 3 positions running right now. And I've told us all to secure all current position by moving our stop loss somewhere right below the $73.80 level, as we look forward to see how price action will continue to the upside here. So anywhere above the $73.90 level will be an area for trading opportunities. Hold on, please. All right, sorry for the breaking transmission. I'm back again. I'm so sorry, I had to attend to some personal issues here. So where are we? So we are doing a recap on what we did today on the extra and speed live, and I told us all that we are in a buy position on the US oil, where we have moved our stop loss accordingly to secure this current position right now. So we hope that price action will continue to the upside, and to make things a little bit easy for us to be able to be comfortable in whatever position we are in right now, we have a bullish trend line figured out here, and this should be our yardstick for trading activity for today. So what this simply means is that if price action remains above this trend line, we shall feel comfortable in our buy position. But if it so happens that price action drops below the structure, which also shares a confluence with the $73.50 level, we'll be looking out for selling opportunities in this market. But remember, I told you we are not getting too excited at the breakdown of that structure, as we need some confirmations to happen in the form of a retest of that level in order to join that trend continuation to the downside. So that is how we are going to be selling for today, but I'm holding on to a bullish bias. But if a sell opportunity comes, we want to be part of it too as well. Then we went on to talk about the US tech on this one, where I was able to identify this simple channel here, where price is currently trading within a critical structure here, just within the 12,740 and the 12,700 level. And to guide our trading activity today, we connected the series of lower highs here. Obviously, it has been bearish since the beginning of this week, and we have the situation here figured out. And I told you that I'm tending towards a bearish momentum here. If we consider the long-term bearish momentum in this market, I will be considering selling at this particular point in time. And where are we going to be selling? We want to see price action break down the 12,700, and if price action ever breaks down the 12,700, it will be a sign that we are going bearish on this one. So we should have a sell stop order below that structure, and if you see a breakdown of the 12,700, price will have come back below the bearish trend line here to incite another wave of bearish momentum to the downside. But if the opposite happens here and this bullish momentum wants to continue to the upside, then a breakout of the 12,740 should be welcoming a buy position in this market. So that is how we are going to be trading the US tech for today. Very simple, isn't it? Then we went on to talk about the GBPUSD here, where we already saw a breakout of that very important key level at the 1.23500 level, which has been a strong selling niche in this market in the last 1 week. And I told us all that since we had the breakout of this level here, we should be having a buy stop order above the structure so that we can be part of that move to the upside. Now, I said something here, anywhere above the 1.2350 level will be a good position to buy the GBPUSD. But if the opposite happens here and price action drops down the bullish trend line that has been guiding this bullish momentum since the beginning of the week, breaking down the 1.22100 level, we want to see a retest of structure with selling pressure below the trend line here to give us that leverage to join a decline to the downside. So we are going to be selling anywhere below both the trend line and the 1.22100 level. Then we went on to talk about the XAUUSD, where we already have a setup here. I told you I'm already in a buy position, and for those who are already in the buy position, well done to you for being on standby, and you move your stop loss to your entry point. Seems most reasonable at this particular point in time. And I told you that we might likely see price action drop back into structure to retest the structure in anticipation of another wave, and if that happens, we want to be buying at that point. But if price action continues to the upside in such a way that it breaks out of the 1,975, we want to be adding more position here. Now, in as much as we look out for buying opportunity in this market, I told us all that to sell the XAUUSD, the only thing we want to be seeing in this market is a breakdown of the $1,956 level to sell the XAUUSD for today. Then a further breakdown of the 1,945 will be welcoming additional position in that regard. Then we went on to close the day with the XAGUSD, I guess. And on the XAGUSD, we already have identified a setup here where we are looking for both. We have our options open for both a bullish and bearish momentum here. So I told us all that we want a breakout of the structure for buying opportunities to happen, and a breakout of the $23.50 level for more opportunities to add more position here. However, if price action ever breaks down this bullish trend line that we have here, then we want to be seeing a momentum shift, as at this point we would have had a lower high, giving us a clue that buyers finding it difficult to find new high here. And if that happens, selling pressure below the structure will be welcoming a sell position in this market. Then a further breakdown of that demand zone here at the $22.80 level will be welcoming additional position to our existing trade. So these are my views here, and I hope you are able to screenshot my screen, and I'm very confident that you are well equipped to be able to take advantage of any trading opportunities that comes on during the New York session today. So on this note, I wish you best of luck today, and for my newcomers, you're welcome. I hope you were able to learn one or two things today, and I assure you that with time you get to understand how this works. And I hope to see you guys same time tomorrow, 10 a.m. UTC, 11 a.m. West African time, as we come here again to review how well the pairs that we are monitoring has been doing so far for this week, and at the same time get ready for the New York session tomorrow. So on this note, I wish you best of luck once again, and do have a wonderful and beautiful evening, everyone. Bye bye.